Why would a bank take that insane risk of lending more money than something is worth if they didn't have some type of risk that they were maybe looking at if they didn't do that? They've got to engage in more risky lending in order to try and save the risky lending that they did before. And the fact that this isn't being talked about more, I mean, I don't know. I don't know why people aren't talking about this more. And this sounds like something straight out of the global financial crisis in the US. The supply of condos in Toronto has gone absolutely parabolic, and at the same time you've had loans from the financial institutions to developers go absolutely parabolic, and they're extremely leveraged. So we're going to get onto what the big bank RBC is saying about the condo market, and also what's going on their balance sheet when it comes to the leverage that they're taking in this segment. But first of all, just so I can get you to understand the type of product that is coming online in Toronto, I want to show you this unit, which I picked completely at random here. And it's just one of these shoebox box condos that people cannot sell. This has been on the market for 75 days and it's got quite the history here. It was bought in 2022 and leased. They tried to sell it for $700,000. Now they're trying to sell it for $550,000. It's been on the market 75 days, still not selling. You can even see that the rent went up to $2,500, then it went down $2,300, and it's likely even less than that today. And they're likely looking at maybe refinancing their mortgage. Like, holy shit, we can't afford to have a mortgage like this and also rent it out at this huge loss, subsidizing this place by maybe $2,000 a month. I mean, it's absolutely insane what's going on. But this is just a tiny condo. It's no bigger than like a junior suite hotel room, essentially. And yeah, it's just absolutely insane. You've got thousands and thousands of these coming online. Just take a look at this chart. I mean, this is absolutely going parabolic. This is the record high number of months of supply for pre-construction condos in Toronto. And obviously from hitting a low here in 2022, when there was this massive investor frenzy, you have seen this go absolutely parabolic. So get this, it's gone from 1.9 months of supply to 57.40 months of supply. This is a near 3,000% move in the months of supply. So then you have to ask the question, well, where's the exposure for the banks? How are they exposed? And I got Warren AI to just quickly compile this chart to show you, which illustrates how many loans these banks have compared to their equity. So if you look at the Royal Bank of Canada, they've got nearly $1 trillion net in loans compared to equity of $127 billion. So that means they have $7.7 for every dollar of equity in loans, which is absolutely insane. It's even higher at TD Bank at $8.2. And then at Bank of Montreal, it's $8. Bank of Nova Scotia, $9. And CIBC, as you would expect, $9.5 of loans for every dollar that they have. I don't know. Do you think that's risky? I mean, you tell me in the comments below. I mean, the bank's earnings have been pretty good, right? And they're showing resilience, but you've got to ask the question, is there a risk that could eventually come to fruition in the banking system considering this risk? And there's a reason why I'm talking about this condo market so much, and that is because it is such a huge market representing billions of dollars worth of loans, hundreds of billions of dollars worth of loans, and hundreds of billions of dollars worth of risk. Have they really got the money if there's a substantial loss that hits? What to do if your pre-construction condo has dropped in value? And this kind of just illustrates what's going on. And this sounds like something straight out of the global financial crisis in the US. Many of you watch from the US, and if you're watching right now from the US, comment below. Does this sound like something that a bank would do during the global financial crisis? I mean, we know, for instance, the Royal Bank of Canada is 100% doing this, but take a listen to this. this. To determine potential financing, lenders typically use a property's appraised value at closing, not when the buyer signs the purchase agreement, even if they got a pre-approved mortgage. And when prices drop, buyers may find they cannot borrow as much of the purchase price as they had expected. And that's just one of the risks that you take on board when obviously there's years before you're closing. You can't just get a guaranteed mortgage for an appraisal value that may not exist in a couple of years. Some real estate developers work with banks to provide financing based on the purchase price rather than the appraised value. This may allow a purchaser to borrow more money, but it does not change the fact that they may be buying an asset that is underwater with more debt than value. So that means that you could essentially have mortgages right now that are 150% loan to value ratio, because we don't even know the fair market value yet for these condos, because there's not enough sales that are going on that you can really get an accurate measure of what's going on with the prices. And you know, as John Flynn said a couple of weeks ago, when you look at somebody and they come in and they reprice their unit in a building much less than everybody else because they need to sell, well, suddenly everybody else has got to adjust their price as well. So real estate prices are at the margin. But doesn't that sound insane? I mean, let me read that to you again. Some real estate developers work with banks to provide financing based on the purchase price rather than the appraised value. First of all, you've got to ask that question, which is, why would a bank take that insane risk of lending more money than something is worth if they didn't have some type of risk that they were maybe looking at if they didn't do that? So essentially, they've got to engage in more risky lending in order to try and save the risky lending that they did before, which could be towards these developers. So, I mean, it's just showing you how insane this market really is. And the fact that this isn't being talked about more, I mean, I don't know. I don't know why people aren't talking about this more, because this is just completely insane. As some people have said on X, it probably even breaks Canada's mortgage rules, because, you know, you can't have 120% LTV loan from the get-go in Canada. But that is what's happening. That is what's being allowed to happen. And it's just showing the fraud that is going on. And then you've got Better Dwelling, who put out this great article, which brings a lot of the data from RBC, which I kind of find hilarious. You know, because RBC could be in a bit of a crisis themselves, because obviously they are the ones that have basically been leading this blanket appraisal bullshit that we've been seeing in the mainstream media. So it's very interesting that RBC, you know, are putting out this data, but then they're doing all this risky stuff at the same time. I mean, it's just absolutely insane. It just goes to show how different parts of institutions are so segregated, and the risk departments are obviously just not doing their job, or they're just being told to ignore the risk at this point. So the numbers for this are absolutely insane, because basically what it says here is Toronto new condo starts are projected to fall over 93% by December 2026. So why is this a problem? Well, just think about it, guys. How many developers are going to go bust, and how many jobs are tied to construction in Toronto?
We are seeing not only layoffs now, we're going to see many more layoffs coming forward. 40 to 50% of the construction workforce,
that's
by some
800,000
jobs are at risk.
Well, you just have to think about it, guys. How many jobs are tied to construction, and how many developers are going to go bust if condo starts fall 93%? And you already know that Toronto is obviously grappling with an unemployment crisis that is going on there. But if you look at what's going on with condo starts, the collapse has already started. So these developers aren't selling new units. So if their business is operating like a Ponzi scheme, and I'm not saying it is, but if they're relying on constantly selling these new units on new buildings in order to pay for the old buildings where they've got losses, then that is all going to come to a screaming halt. And I don't need to tell you that developers are going bust, because we've already had multiple developers that have gone bust over the past couple of years, and that's only only going to increase if obviously they're not doing any business anymore, if obviously their business is going to collapse by 93%. How many engineers, how many construction workers, how many architects are going to be laid off as a result of this? There's all these businesses that are linked to the housing market, but indirectly, like architectural firms, which, you know, architects earn a load of money, and obviously if there's nothing being built, if nobody's really building houses and they're not building these big fancy condo projects, then they're going to be getting laid off, because you've already seen construction of new condo apartments has come to abrupt halt in recent months. Coming from RBC, the rolling 12-month sum of starts plunged 10,583 units in July, down 60% from last year and 68% lower than the record high in mid-2023. So again, this is just screaming red flags when you've got these starts falling like this and you've got months of supply just shooting and absolutely skyrocketing, going parabolic. I mean, this chart is straight out of the global financial crisis. You have seen charts like this where months of inventory in certain cities, they have gone up by this much. And then another shocking chart is just the supply is continually going to be entering here, because there's still a massive amount of condos that are coming online right now. Meanwhile, you've got the supply already at all-time highs. So when you're asking, is this going to get worse or better? Obviously, the banks are betting on this getting better, and they're probably betting on that because they think that the Bank of Canada controls everything, and if they just drop interest rates down to 2%, then suddenly investors are going to rush back to the market. But they're ignoring the fundamentals, which is basically investors want cash flow. And obviously, if they're losing money, why are they going to buy units, rent them out for a loss? I mean, that's just completely stupid. And we're nowhere near at a point where they're going to make money. So this market is stuck in what I call a doom loop, which is self-reinforcing of the prices and the market just getting worse. So Greater Toronto is still building a lot of condo apartments, but the volume is collapsing fast. The seasonally adjusted annual rate of condos under construction hit 93,000 units in July, just 11% below the all-time high, which suggests completions are likely to stay relatively plentiful in the near term. And that's from the chief economist at RBC. The volume remains one of the highest on record, but policymakers are spending billions in tax dollars and the volume is sinking. So, I mean, it just goes to show the complete insanity of what's going on in this condo market. But you have to ask that question. Do you think this is a major risk to the housing market? And it's not just the condo market that's collapsing. It's just the condo market has been leveraged to a point that it has become majorly risky, when obviously you've got banks that are writing loans at 120, 150% LTV. I mean, we just don't know, because the appraisal value is going to be completely ignored. I mean, this is just massive fraud that is going on and nobody is shouting about it. I mean, it's kind of like when Michael Burry was talking about all the fraud in the United States in the lead up to the financial crisis. It's happening in broad daylight. Different places have covered it, but it's not really being took mainstream right now. So is the condo market heading for a hard landing? Well, it looks like it pretty obviously is, unless the condo market just suddenly starts booming. And like I said, there's nothing that shows a sign that that's suddenly going to start happening, unless suddenly billions of dollars appear that want to chase money losing investments, which I think is unlikely given the environment we're in the world and the global economy right now. So anyway, if you've enjoyed this video, I'd highly recommend you check out this video here. If you're looking for a VPN, also want to help out the channel and get the best VPN at the same time, go to ExpressVPN. There's an affiliate link in the description below, and I will see you in the next one. Take care, guys.